Since CEO Elon Musk announced his ownership on Twitter on April 4th, the shares of Tesla has been steadily declining, falling 42%. But this hasn't stopped one Tesla bull from thinking that the company's stock would do even better in the coming years. One of the hosts of the widely watched investing YouTube series, David Lee, is an ardent Tesla supporter. He has a reputation for being a huge Tesla devotee, and in a recent article he claimed to have multiplied his initial investment in Tesla stock by 100. He asserted that his initial expectation upon purchasing Tesla stock was a tenfold increase in market value, from $3 billion to $40 billion. Now he's saying that the past might come back to haunt us. Which data supports this assertion? Who agrees among the analysts? To find out, continue watching. Some of Musk's investors may be asking if he has lost focus on one of his most lucrative companies, with each new twist in the Musk-Twitter feud. Despite the diversions caused by stock-based issues, Tesla has grown into a formidable force. An encouraging first quarter and ambitious long-term objectives pique the interest of investors. The question that has plagued Tesla for a long time, nevertheless, remains unanswered. Does Tesla's market cap reflect its true potential? The economic fallout from Russia's invasion of Ukraine, along with historically high inflation and rising interest rates, has recently tested the limits of growth stock values. The Nasdaq Composite has fallen 28% so far this year, while the FBO Volatility Index, which is sometimes referred to as the fear gauge of Wall Street, has climbed more than 80% during the same period, suggesting that investors are currently worried. Losing 41% of its value since the beginning of the year, Tesla has joined the sell-off, solidifying its position as one of the most controversial stocks on Wall Street. When it comes to electric vehicles, Tesla is still far and away the leader. Market research firm Cox Automotive reports that in the U.S., Tesla sold more high-end vehicles in Q4 than Audi, BMW, Lexus, and Mercedes-Benz put together, and that the company holds a 75% share of the electric vehicle market. A 10-year-old investor in Elon Musk, founder of Tesla, would have seen an average yearly return of over 70% on their $10,000. During that time, an investment of $10,000 in the S&P 500 only increased in value by 2%. The compounding rate is merely 14% each year. If those investors had put $10,000 in 12 years ago, their money would be worth $1.39 million now, a gain of about 13,800%. We completely get why some people might be suspicious of the Tesla brand. The company's ascent has been absolutely mind-boggling. Approximately 1 million electric vehicles were supplied in 2021, and 310,000 more were delivered in the first quarter of this year, a rise of 67% from the previous year. As a result, Tesla is now on pace to deliver 20 million Teslas by 2030, as Musk had promised, according to Lee. Similar to how the original iPhone was misunderstood, people are misunderstanding Tesla. According to him, when it comes to embracing complexity through innovation, Tesla is just at the beginning. Holding common stock in Tesla has increased its value 100-fold in little over 8 years, which surprised him, as we stated before. He forecasts that the stock will reach new heights minus 100 times higher in the next 8 years. Among car companies, Tesla has the highest market value. Its value exceeds that of Toyota, the second largest automaker, by more than $226 billion. While filming this video, its value exceeds that of Honda, Stellantis, Ford, and General Motors put together. The market cap of the industry leader in electric vehicles hit $1 trillion in late 2021, but it has since fallen and is now at around $738 billion. When will Elon Musk's once valuable company, which was worth $1 trillion, reclaim that amount? On the other hand, sales growth is picking up speed. It has also turned a profit and has seen rising rates of earnings growth. The electric vehicle maker's business is still growing rapidly, despite economic challenges and Musk's dramatic planned acquisition of Twitter. The electric crossover car Model Y and the mass market set-in Model 3 are major players in this. Incorporating its own 4680 battery cell, it has begun exporting the Model Y from its Gigafactory in Texas. This is anticipated to be a major breakthrough considering the current supply chain in the auto industry. Issue: it's reasonable to expect Tesla to maintain its position as industry leader for the foreseeable future, and the stock, despite the irrational behavior of its CEO, will continue to be an excellent investment for the same period. According to Lai, a lot of individuals judge their company's performance based on their familiarity with the earnings report rather than on analyst predictions for metrics like revenue margin, profits per share, EPS, and other metrics. He elaborated by saying that analysts do not often hold the majority of ordinary company shares, which is a problem with this approach. Analysts may not always own any shares in the companies they work for. For these experts, it is of utmost importance whether the company's results surprise or disappoint them. Analysts and investors often have different expectations for young, fast-growing businesses. This is so because, for a long time running, Tesla has been delivering results that have beyond analyst expectations. Even though the stock price was falling, the company's situation was becoming better. Regardless of the difficulties in the supply chain and the rise in material costs, the Shanghai factory was closed. The electric car manufacturer Tesla reported a little increase in first quarter deliveries to 310,000 units and manufacturing to 305,000 units on April 2nd. When it comes to manufacturing cars, Tesla has lately been inundated with praise. Revenue from automobiles jumped 87% as a result of a 69% year-over-year rise in first quarter production. Since sales increased at a quicker rate than manufacturing, Tesla is enjoying improved margins on each vehicle it manufactures. Price hikes in 2021 and more efficient manufacturing of the more expensive Model S and X cars contributed to this increase in profit margin. Its revenue for the first quarter of 2022 was $18.8 billion, an increase of 81% compared to the same period in the previous year, as disclosed on April 20th. This gave the stock a temporary lift since it exceeded analysts' projections of $17.8 billion. Furthermore, it finally launched its $5.4 billion production facility in Berlin intended to service Europe. Additionally, a stock split is being considered, which might increase the stock's appeal to retail investors. When it comes to luxury vehicles, Tesla is about to make a splash. Therefore, its value should be 35 times earnings, not 6 times like GM or 8.6 times like Toyota. Yet Tesla is worth 90 times earnings, and it might get there if it keeps growing. Exciting news was also communicated with investors by management. In order to keep Tesla's profit margin at 17.7%, the plan calls for a 50% increase in annual vehicle deliveries over the next few years. By 2022, the firm has the potential to earn $14.9 billion. This works out to 49.5 times full year 2022 earnings for Tesla, which isn't bad for a company that plans to grow by about 50% annually. Consequently, why is Tesla's stock moving in the way it is? Elon Musk's entrepreneurial zeal and Tesla's penchant for constant innovation are the two most obvious factors driving up the company's stock price. The company stands to benefit in the coming years from any rise in the price of fuel or government restrictions imposed on conventional internal combustion engine vehicles. A large gap, however, exists between analysts' top and bottom price targets. The most optimistic analysts are projecting a one-year high of $1,580 for the stock. At the same time, $250 was the lowest price objective. The algorithmic forecasting of wallet investors is more bullish on the company's future. The research claims that the company is an excellent long-term investment with a price target of $1,217 in the coming year. Meanwhile, if the company's 5-year estimate comes true, the stock price of Tesla might reach $2,846. Tesla is at the front of the electric vehicle industry's rapid expansion. 3 to 5 years is the minimum time horizon for an investor planning to hold Tesla shares for long-term gains. At this time, investing in the company is a brilliant move. Still, the end of the bear market is anybody's guess, and the stock price can drop even lower in the near future. We believe you should follow Dave Lee's lead and hold on to this stock for the long haul, as he has said so many times. Another way for investors to reduce their exposure to risk and maybe get a better deal is to buy the shares little by little over a set period of time. Despite the recent decline, the market cap of the company is almost equivalent to that of the six largest automakers in the world based on sales. So many still think that if the stock gets over some obstacles, that buying Tesla stock is the only way to go. In your opinion, what is the optimal price point for Tesla? Please leave a comment.